Good morning, traders. It is Friday, August 1st. Hopefully everybody's had a good previous week. Last week I mentioned I was heading out on a fishing trip with the father-son trip. My dad, myself, and my son Ben, we went on a fishing trip and had a blast. I'll show you some cool clips and video at the end, but let's jump into what's been going on in the markets recently. So a couple of days ago, we had a little bout of panic selling. The stock market dipped into oversold territory, and then we had a bunch of news right after that, and we saw a big pop in the markets. It was very short-lived. It fizzled out right away, but that's what these little bouts of panic selling indicate. You can see over here, we had a little bout of panic selling, and then we had another pop. Again, 30-minute chart is more so day trading, very small moves, but we can nail and identify these. In a green market, we're looking for green spikes. When the trend is up, we're looking for panic selling pullbacks, where usually bargain hunters step in and the market rebounds. Now, we've been dipping into some oversold territory yesterday a couple more times, the lime green. Again, these are things in our book, Technical Trading Mastery. We show you how to set up these indicators and these overbought, oversold things on the charts. But overall, if you take a look, you can see on the daily chart, we had a pop on the S&P 500, followed by a sell-off yesterday, and even more selling today with some pretty big volume. So we short-term oversold and dip and a bounce and a pop, and now we're fizzling out with a sell-off. Now, the S&P 500 hit all-time highs yesterday. Let's just see if the NASDAQ did as well. Let's just go back to the QQQ feature or NASDAQ feature. So it hit all-time highs. Now, again, don't forget, these two indices have camouflage, meaning they have the Magnificent Seven pushing them higher, people thinking their portfolios should be going higher, but in a lot of cases, they're not. And we talked about this last week in the videos that I did based on what the VIX was showing us, what the VIX was low, and also the put-call ratio, which I talked about, this specific scenario that I follow for the market to tell us, hey, that it's about to start a pullback. If we look at the broad market, and the way I like to look at the broad market is the RSP ETF, which is the equal weighted S&P 500. So strip out the heavyweights and their weighting there, along with small caps and micro caps. And you'll notice since I talked about that, the market put in a high and it's been pulling back. Most portfolios have been moving lower for the past week from when I said that. And that's what I like to follow and get a gauge of, is what the overall market is doing, not what the S&P 500 and QQQ are doing at times, because they give you this false belief. They're hitting all-time highs really just a day ago, and here the markets have been selling off most portfolios for the past week with some elevated volume to the downside. So we are dipping into an oversold territory. I do think we're going to go into a bigger type of correction, and a few reasons for that. When we look at our QQQ trade that we had, we stepped out of the market. We avoided the crash. In fact, we were able to continue to grow our account as the market fell. We got back in. We hit first target, second target, and we hit our 15% target about a week and a half ago. And based on the QQQ, when the QQQ hits a 15% target after a trend change, we tend to see the market, it'll usually push a little bit higher, but we start to get volatility. And we are starting to see that volatility. We had a big gap up followed by heavy selling. This is a bearish engulfing candle, meaning it opened higher than the previous day and then sold down and closed below the previous day. That is not a very strong sign. Usually it means we're going to see more selling pressure take place. And that's what we've been talking about, how this market is pointing to that type of correction. So I am expecting today, when we look at the indices down the left-hand side here, the Russell 2000 is down the most, 1.25%, and the NASDAQ is down, and so are all the others. But we're going to see probably a spike of panic. You guys are probably, or those who don't understand the markets and don't watch these videos, there's going to be a lot of panic in the market. The VIX is up this morning, 12%. It's probably going to go higher. And that is just people making reactions, emotional trading decisions, and they're going to bail out of trades. Now, we are still long one position here, a small portion of our account with the S&P 500. We have one more target slightly higher. But overall, we've pretty much closed out this entire position, and we are back mostly in cash, waiting for the trend to change, to go to red bars and then find a new opportunity. And as you guys know, we like to focus on the 5 to 12 waves that roll through various assets each year. Obviously, this wave came to an end. We avoided that. We got in, we caught the next wave, and we've pretty much trimmed off all of our positions. And it really doesn't matter even if this pulls back. We have such a small position left in the stock market itself, and the rest just earning daily interest in cash at the moment. It really doesn't matter if this trend hits this target or not. It's not going to really move our portfolio too much. Our portfolio is hitting all-time highs, and this little portion that we have left in the SPY really is just a little bit of icing on the cake if we do get one final push up before I think we go into a bigger correction. But it does look and feel like we are starting that correction I've been talking about. Based on the NASDAQ, we should go into a multi-week or multi-month pullback. And the question is it 3-5%? Is it 15 or 20%? Is it the start of a bear market? I don't know. Nobody knows. And that's why we just have to manage positions. When the market resets, we'll get a new position to go long if it starts to go higher again. And if it rolls over and sells off, well, we'll be able to benefit by different positions as the market goes down. Some photos of my son, absolutely, who doesn't love driving a boat and cruising and trolling? There's my dad, and Ben and I having breakfast at the lodge. Every morning we've got breakfast, and at nighttime, there's he caught the first fish of the trip, a little brook trout down, pretty amazing. This is our first little stringer of some bass. We did a nice bass with some lemon myrtle shake on it, which is absolutely so tasty with butter. There's us just cruising and fishing. There's my son's first pike, and he caught it on his first lure. First time he's ever caught anything on a lure. Usually we always use live bait, so he was pretty excited there. And he thought it was just pretty awesome. There's another stringer of some fish. We let most of them go. We would just swap on the stringer throughout the day, get rid of the biggest ones, get rid of the smallest ones, and we'd eat a couple for lunch that were kind of the perfect size, but nice smallmouth bass.